to today's panel discussion on important changes in GST effective from 1st January 2021. We welcome all our delegates for joining us here today. A special word of welcome for our panelists who have also joined us here to enlighten the participants on the different aspects of the important changes in GST. Now I'll request our President, Mr. Sanjay Aggarwal, to give the formal presidential address. Over to you, sir.
Thank you. Mr. Puneet Bansal from Nitya Tax Associates, Mr. Tushar Aggarwal from Tattvam Advisors, Mr. N.K. Gupta, S.S. Kothari Mehta and Company, Mr. Shailendra Kumar, TIOL, of course, our Chair of the Indirect Taxes Committee, Mr. Bimal Jain, Co-Chair. I don't think he's joined as yet, Ashish.
He hasn't joined as yet, yes.
He hasn't, okay. Eminent dignitaries, ladies and gentlemen, very good afternoon to you all. As we are on the verge of the, this horrible year of 2020 coming to an end, I think there are new hopes, new optimism, and new, I would say, energy with which probably we'll be looking at this coming year, 2021. Only thing that about the good about the year 2020 is that it has given us a 2020 vision about all the things that can go bad, and they have gone bad. So this is the sort of challenge that the whole humanity has faced this year, and one sincerely hopes that the coming year will be the year in which we'll make up for all that we have lost or suffered, and probably, hopefully be a year of prosperity and joy for all of us. The vaccine has already come in, and one reads in the newspapers about the advanced plans being made already to how to equitably distribute the vaccines across the nation. Hopefully those who need it the most would get it first. So I think we have every reason to be optimistic about the coming year. And these minor challenges that we face, we have got experts like Vimalji and Guptaji and all the panel with us to guide us through these minor challenges that happen in terms of changes in the laws that happen. And then we as trade industry are supposed to tackle these, right? So we are in any case going to be well prepared for those also. So friends, the government has notified certain changes to the GST rules on 22nd December. And some of the rules are set to be applicable from 1st January 2021. So today's panel discussion aims to deliberate and throw light on the important changes that will be applicable in the new year. Since the implementation of GST, there have been many instances of fraud due to fake invoicing. There is a need to improve the system as well as the administration to check the frauds. However, on the other side, one must be very conscious that while considering a path which gives us abundant power to bring a halt to the business merely on anomalies and not in the nature of fraud, without instilling enough checks and balances in the system. With the objective of curbing fake invoices, the Central Board of Indirect Taxes and Customs has introduced Rule 86B in GST rules to be applicable from the 1st of January 2021, which restricts the use of input tax credit for discharging GST liability only up to 99%. Now, this is not a procedural thing. This is something that is going to hit the pockets of a large chunk of the trade and industry. This means that businesses with a monthly turnover of rupees 50 lakhs and above will have to mandatorily pay at least 1% of the GST liability in cash. It seems that through this rule, the government has put restrictions on seamless input credit utilization. Seamless flow of input tax credit forms the backbone of GST, and any form of restriction on ITC will be a dampener to the spirit of GST. The PSD Chamber has been one of the foremost advocates of GST much before its introduction in a formal shape. We used to support VAT, as it was then called, even 10 years back, and we had always been very strong advocates of seamless GST. This, unfortunately, is something that the government has found it fit to decide and to make applicable on the trade industry. So let us see what all impact it is going to have. But yes, in principle, as a chamber, we definitely do not support such a move. Further, the CBIC has amended GST rules restricting the filing of outward supply details in GSTR1 for businesses that have not paid taxes for the past periods by filing GSTR3B. So far, until now, the non-filing of GSTR3B sorry. So far, until now, the non-filing of GSTR3B resulted in the blockage of e-way bill, but now it will result in GSTR1 blockage as well. These changes somehow indicate that the government is grappling with the lower tax collections and higher tax evasions, burden of which will again be on the honest taxpayer. This is the most unfortunate part, that those who indulge in malpractices, those who indulge in gaming the system, are the ones who cause the most damage to the honest taxpayer, because all these difficulties, all these restrictions which come about end up causing a loss to the honest taxpayer who's trying to live his life in a simple and honest fashion. So as a matter of relief for the taxpayers, the GST taxpayers would be able to pay their tax dues on a self-assessment basis without having to go through the cumbersome process of having to file tax returns on a monthly basis. So this definitely is a relief. The CBIC is expected to introduce new quarterly return and monthly payment system, QRMP, for the GST taxpayers from coming 1st January, that will allow taxpayers to file only 4 GSTR3B returns in a year instead of the 12 returns that are required at present. Apart from the above, the Finance Act 2020 has also made certain amendments in the provisions of the Act. Following amendments shall come into effect from 1st January 2021, along with other related changes in the CGST rules relating to no opportunity of being heard to taxpayers for suspension of registration, time limit for verification of registration applications, biometric-based Aadhaar authentication or verification process for GST registration, blocking of GSTR1 in case of non-filing of GSTR3B, validity of e-way bill, amongst others. We do hope that these amendments will promote voluntary tax compliance, reduce tax litigation, and benefit taxpayers by providing them peace of mind, certainty, and savings on account of time and resources that would otherwise be spent on the long-drawn and vexatious litigation process. Let me just add that as a chamber, we shall always be happy to take up the issues that are raised by our members and the participants in our programs to the highest levels of the government, to try and seek recourse for, at least some of the more difficult provisions that one feels need to be addressed. So on this note, I wish my best to this webinar, and I really hope that this program will help our trade and industry to tackle the new complexities that have come in, and to face them with a strong resolve in the coming new year 2021. Thank you so much, and again wishing you all a very, very happy new year. Thank you.
Thank you, sir.
Sir, I would like to add one thing, that even the GST taxpayer require the vaccine, sir.
Monica.
That's
Yes,
so.
sir. Thank you, sir.
You should be lucky that if you're not.
Thanks for setting the tone for deliberation, sir.
I'm saying you'll be lucky if GST is not imposed on the air you breathe. It's already polluted. No? Please, Monica, continue.
Okay, so should I continue, sir?
Yes.
Okay. So before I hand over the proceedings to Mr. Shailendra Kumar, founder and CEO of Tax India Online, for moderating today's panel discussion, I would like to introduce him briefly. Shailendra Kumar is the founder and CEO of TIOL. He started his career with the Indian Express newspaper in 1990 and then moved on to the Economic Times, where he has worked for more than 5 years before taking the entrepreneurial route to launch TIOL, an ideal based on business needs which he realized as a financial journalist. He spearheads the businesses in all of its facets, including regular interactions with the various policymakers and administrators and managing the editorial and news gathering team at TIOL. Over to you, sir, for moderating the session. So you need to unmute yourself.
Thank you, Monica. Thank you. Good afternoon to all the panelists, other dignitaries, and of course, our wonderful attendees. So friends, it's very unfortunate, very unfortunate that GST continues to stand at a very painful crossroads. You know, if you look at the birth of the GST, 1st July 2017, it was very painful, and the journey of pain has not come to an end. It continues. Leave aside the community of industry and other experts, in this taxation domain, even the taxpayers for that matter, even our GST bureaucracy is not very sure in which direction the GST may barrel onwards in the new year. So friends, ad hocism continues to be the guiding lamp for our GST bureaucracy, the policymakers in North Block, and of course the states as well. Let's not blame the central government alone, because ultimately the sovereignty has been pulled into, on particular basket, and that is how the GST was born. So if you look at ad hocism, it's turning out to be the guiding philosophy. And thanks to this ad hocism, if you look at, we often see good number of amendments in the rules and the sections, which are largely deprived of substance and merit. And for the taxpayers, most of such amendments are necessarily U-turns, by the policymakers who create an environment of falling trust and confidence for a fair treatment. And today, if we stand and look at GST, what we find is that our policymakers, our administrators, our political leadership is actually, they are not trusting the taxpayers. We have fairly popular panelists today with us. Mr. Bimal Jain, of course, needs no introduction. And I can say the same for others. We have Mr. N.K. Gupta, of course, Mr. Puneet Jain, Mr. Tushar. All the panelists will provide you an insight into the recent amendment, the recent changes, and the implications of those changes, which are going to come into play from 1st January, the day most of us prefer celebrating. But this time, of course, it's not the corona alone. We have corona too, which is, in other words, we can say that the GSTs, the kind of changes, the kind of amendments, the kind of, the way its soul is being killed slowly, and the soul is nothing but ITC. So let me start with Mr. Bimal Jain, who will give us, some insight into this, how exactly the soul of GST is being compromised and gradually killed from all the sides, by amending the rules, the two rules, of course, 86AB, and these are notorious twin brothers of Rule 36(4). So, these twin brothers are causing havoc in the industry and particularly the taxpayers. So let me go to Bimalji. Maybe we will start with you and give us an insight into it. Thank you.
Thank you very much, Shailendraji, for leading this panel discussion with the changes effective from 1st of January 21. At the outset, let me thank all the participants who are joining in today. As you rightly said, Shailendraji, GST input tax credit is a soul, and any successful taxation, indirect tax majorly, is banking on input tax credit. And that was the object clause when GST got introduced by the 101 Constitution Amendment Act. We talked about seamless flow of credit. But irony today, if you look at from input tax credit perspective, and all the participants will agree with me today, that for availing input tax credit, the way it was envisaged, initially it was envisaged seamless flow of credit. The way the definition provided for input input services and capital goods was laudable one, used or intended to be used in the course of furtherance of business. But what is happening today, and why these kind of rules which are coming and overriding the provision? Let me tell you, it may be a little laughable for all of us together, but that is what the irony today. If someone, a registered person, want to avail credit, how many process he need to run through? You will surprised to note availing ITC is a mammoth task. It's a task which is quite, you will find, cumbersome one. Starting with, you need to satisfy the 4 conditions of section 16 subsection 2 of CGST Act. You should have tax invoice, you must have received goods and services, your supplier must have paid taxes. He hasn't paid, but you have, as a recipient, you have paid to him. Your credit would be denied. And recipient filing regular GST return. First, you must satisfy 4 conditions. Then you go to section 16, subsection 4. Look at the time limit to avail credit. Earliest of due date, and that is due date for the September month following the end of financial year, or due date of annual return, whichever is earlier. Dispute litigation going on. That is not the end of the story. You need to go back to section 17, subsection 5. Look at whether your credit is not falling into negative list. And thereafter, you have to make comparison and checking cross verification GSTR 2A. Now it be GSTR 2B. And that is not the end of the story. Rule 36, sub rule 4. Creating a condition, there would be capping of ITC for invoice and debit note, which is not uploaded by the supplier. Then rule 42 and 43, reversal of common ITC for input and input services towards exempted supplies, rule 42. And rule 43 talks about reversal of credit, common credit on capital goods. Not the end of the story. Rule 86A, blocking of ITC by the proper officer. I'm going to discuss these provisions today. And then new rule which is coming from January 1, 21, rule 86B. Now there will be restriction on amount lying in your e-credit ledger to be used towards your output tax liability. Look at these are the so many steps for availing ITC. Looks like to me the problem for both party, taxpayer and tax department. My humble suggestion, had we continued with the automated GST return system as envisaged when GST got introduced, GSTR 1, outward supply, GSTR 2A, which would be credit auto-reflected for the recipient and buyer, then GSTR 2. Then GSTR 1A for the supplier either to accept or reject, and GSTR 3, section 37, 38, 39, 41, 42, 49. Had we continued with the automated GST return system, I'm of the opinion, in my humble opinion, we would not have required any rules, whatever we are finding today. But who is at fault? Taxpayer or tax department? They did not introduce GSTR 2 and 3. They have withdrawn from July 17. Since they have not implemented automated GST return system, hence these problems are coming out. Take the example of fake invoice. Why fake invoice? Why fake credit is so much in the market, and why it has started coming in? And department is catch holding such transaction only from 2019. GSTR 2A first time came in 2019. It was supposed to be from July 17. GSTR 2A showcasing that GSTR 1 filed, but GSTR 3B is not being filed. Taxes are not being paid. Fake invoices are coming out. So my only humble submission is for these kind of rules which is coming out today, it is because of half-hearted introduction of GST return system. Had we continued with the return system as envisaged, I'm of the humble opinion that 95% problems should have been solved. It would be seamless flow of credit. Why this is problem coming out? Because of tax evader. who are raising fake invoice and passing on fraudulent input tax credit. So my first point is that this ITC, which is really a mammoth task, difficult task, cumbersome task for availing in GST regime. Going forward, Rule 36, Sub-Rule 4. This got introduced on 9th October 2019. And what is this rule? Let me tell you. Input tax credit pertaining to invoice or debit note, which is not uploaded by the supplier. This uploaded word got changed to furnished in the revised CGST rules 2017. If it is not furnished by the supplier, or it is being furnished through IFF invoice furnishing facility, then there would be restriction on input tax credit. Initially, it was 20% when it got introduced on 9th October 2019, reduced to 10% from 1st January 2020. Now it is going to be reduced to 5% from 1st January 21 of eligible credit coming in GSTR 2A of the recipient and buyer of goods or services or both. In simple terms, if you are a recipient and you're a buyer, you got 15 lakh rupees, 1-5, in your books of accounts. You have satisfied all 4 conditions of section 16, subsection 2. But you are finding only 10 lakh. It's coming in your GSTR 2A. So there's a mismatch of 5 lakh rupees, meaning thereby pertaining to these 5 lakhs, your supplier has not furnished invoice or debit note in their GSTR 1. Thereby, it is not coming in your GSTR 2A. Then the restriction pertaining to 5 lakh, which is not coming in 2A, initially it was 20%, reduced to 10%. Now it is going to be reduced to 5% from 1st January 21. So what happened? 5% of eligible credit coming in 2A, which is 10 lakh. So it would be only 50,000 rupees you are allowed to avail credit for 5 lakh rupees, pertaining to 5 lakh rupees invoice and debit note not uploaded by your supplier. So the condition is know your supplier. You should deal with the supplier who are tax compliant and they are filing a regular GST return, not only GSTR 1, GSTR 3B as well. So first change Rule 36, Sub-Rule 4. Taking you to the second change, Rule 86A. There's no change. This Rule 86A got introduced from 26 December 2019 by notification number 75/2019. And just to draw the attention of all the participants, why such blocking? Rule 86A of CGST rule envisages blocking of credit. Commissioner or any officer authorized by the commissioner not below the rank of assistant commissioner, if they are having reason to believe that recipient who is a registered person has taken fraudulent credit or ineligible credit on 5 count. There are 5 account on 5 region. The first, recipient has taken credit on invoice or debit note raised by the supplier, but supplier is non-existent, not doing any business from any place of business for which he has taken registration. Being recipient, you have not received goods and services. Being recipient, you're not having tax invoice copy, eligible copy for availing credit. Fourth, on invoice, you're taking credit, taxes are not being paid to the government. As a recipient, you may have paid the taxes to the supplier, and supplier is a fraudulent one. He has not deposited. Credit can be blocked in the hands of recipient. And last, as a recipient, you are availing credit, but you're not existent and you're not conducting any business from any place for which you have taken registration. So 5 region, if you have availed fraudulent credit or ineligible credit, commissioner or any officer not below the rank of assistant commissioner can block your input tax credit for a maximum period of 1 year. Now the question comes with the Rule 86A, Rule 36 of Rule 4. And I'm going to discuss Rule 86B as well, which is going to be effective from 1st of January 21. Whether these rules are within the 4 corners of law. Look at the rule, the way it is got introduced. On Rule 86A, I'm giving you 4 legal regions. It is in violation of natural justice. The first region. Unilaterally, my e-credit ledger, recipient e-credit ledger is blocked by the department. No opportunity of heard being given and no so-called notice is being issued. Is it possible? It is complete in violation of natural justice. Coming to the second point. If I assume recipient and buyer has taken fraudulent credit or ineligible credit, provision says section 74 of CGST Act that so-called notice must be issued. But for Rule 86A, no so-called notice are being issued. Third region, section 75 subsection 4. Please note this point. Saying any adverse order which is passed by the department, they must give opportunity of being heard. So how come unilaterally, without opportunity of being heard, my e-credit ledger gets blocked? Coming to the last point, such rules are also circumventing my right to appeal in GST. If any adverse order passed, I'm having right to appeal by paying 10% of disputed tax. I can go for appellate mechanism, but this blocking of credit happening unilaterally with the no opportunity of being heard and no so-called notice is being issued, is it really within the 4 corners of natural justice, within the provision of law? To my mind, no. No. Now look at Rule 86B, which is going to be introduced from January 1, 2021. What this rule is saying, listen very carefully. This rule is saying, Bimal, there would be restriction now on amount to be used towards your output tax liability. And how it is being worded, Rule 86B is worded like this. There would be restriction. A registered person cannot use in excess of 99% of its output tax liability, meaning thereby one person compulsorily he has to pay through e-cash ledger on value of taxable supplies in a month exceeding 50 lakhs. So it is value of taxable supplies. So total 6 crore rupees per annum. But dispute, the way this rule is being worded, they are saying 50 lakh rupees exceeding 50 lakh rupees in a month, except exempt supplies and export. So bear in your mind, there may be that value of taxable supplies exceeding 50 lakh, let's say in November month, but less in December. Again, exceeding more than 50 lakh in January. Again, less than 50 lakh in February. How to follow? As per me, the way the rule is there, it is to be followed only in such month where value of taxable supplies other than exempt supplies and export exceeding 50 lakh rupees. So you have to look at month-wise turnover, first part. Now this rule is being stated not applicable in 5 given situations. And this is very important. You must know when this rule is not applicable. Then I will conclude this Rule 86B from the perspective of within the 4 corners of the provision of law. First, if you are a such registered person or proprietor or karta or any of his partners of the firm, managing director or member of managing committee or trustee, and you're paying more than 1 lakh rupees income tax under Income Tax Act 1961 in each of the last 2 financial years. If you are paying more than 1 lakh rupees in each of last 2 financial years, this rule is not applicable. Second, when it is not applicable, if you're an exporter and you're exporting goods and services without payment of IGST, meaning thereby under LUT or bond, under section 54, subsection 3, Roman 1, and you have got the refund of more than 1 lakh rupees in preceding financial year, then this rule is not applicable. But question to all, if you're a new exporter and you have just started exporting and you have not taken any refund from the department, this rule is going to be applicable. Even though you have opted for LUT, you need not require to pay. See the contradiction coming out. I will tell you, in such cases, you have to go back to the commissioner or the proper officer, making out your case and telling them this rule is not applicable to me, even for the exporter starting new export of goods or services. Coming to the third condition, if you are taking refund under inverted duty structure, and what is inverted duty structure? Rate on input is higher than rate on output, and you have taken refund of more than 1 lakh rupees in preceding financial year, this rule is not applicable. 4, this rule is not applicable if you have paid your output tax, and that to be calculated on cumulative basis in excess of 1% from your e-cash ledger. Just to understand, let's say I'm talking about tax period of November, June, and till November, let's say April to November, your outward tax was 1 lakh rupees, and you have paid 10,000 rupees through your e-cash ledger, which is 10% of your total outward tax in excess of 1%, then this rule is not applicable. But this rule is going to be applicable only from 1st January 21. So cumulative effect you need to see from January onwards. Last condition, it is not applicable for the government department, public sector undertaking, local authorities, or statutory bodies. Now, having said these 5 exceptions where this rule is not applicable, I got certain query in my mind. I want to solve these query with all of you. The first, as I said, you need to check value month-wise. In a particular month, if it is exceeding 50 lakh, that is value of taxable supplies, other than exempt and export. Then only in that month it is going to be applicable. Second, whether this kind of provision rule can be introduced, we can see the provision under section 49 subsection 4 of CGST Act. They have said in such manner as may be prescribed. So they are having power to introduce rule restricting usage of my amount lying in my e-credit ledger. But is it going worthwhile? There may be accumulation for lot many regions. You got capital incentive project. You got lot of amount accumulated because of credit on capital goods. You need not require to pay in cash. Second, your startup, you got only accumulation, lesser outward. Third, you just started doing export. Lot many factors can be looked into. So what you should do, within the rule given, you can approach to the commissioner, make out your case and say you need not require to. So you have to go individually, get yourself verified by the department, then only you're permitted. But coming to the moot question, whether this provision really can be implemented in the name of seamless flow of credit, When we are talking about object clause of GST introduced in the country, to my mind, we are not following the provision the way it is supposed to be. Creating such restriction, which is overriding the soul of GST. It is really hurting soul of ITC, input tax credit. Now coming to the component which I can say as a conclusion of my deliberation today, see, I'm being asked this GST input tax credit, which is sold, as rightly said by Shalendra Kumar ji, who is moderating today's session. Are we really finding our soul supported with the GST law? I can give you the reason that this GST ITC concept, which was envisaged, which was stated in an object clause, and which was said to be seamless flow of credit, is missing as on date. I'm sorry to say, I'm taking department side also, that a lot of fake invoices, lot of fraudulent credit, what department will do? They have their own challenges. So they are working out and trying to come out in a piecemeal manner, I will say, by way of rule. But I'm again questioning and asking this moot question, broader question, silver lining question. Had we continued with basic GST automated return system as envisaged in terms of section 37, 38, 39, 41, 42, then I am of the opinion, in my humble opinion, we would not have required these rules. We are struggling on section 16, subsection 4. What is the time limit to avail credit? Even we are struggling that when I look at section 16, subsection 4, what is the return under section 39? Is it GSTR 3B or GSTR 3? Under section 39, it was envisaged GSTR 3 that never got introduced. They introduced GSTR 3B by way of rule. And by Honorable Gujarat High Court, they have said 3B is not a return under section 39. By way of retrospective amendment, now they are saying 3B is a return under section 39, though this matter is sub judice before Honorable Supreme Court. Section 17, subsection 5, block credit, negative list. I'm getting my office constructed, mall constructed, factory constructed. I'm not allowed to avail credit. Can I expect to do my business without having office, without having factory, without having hotel, without having mall? Such negative list which is going contradictory with the vision of in the course of furtherance of business should be done away with. I'm giving sales promotion for in the course of furtherance of business. I'm motivating my distributor, dealer, and retailer to do more and more business. Is it gift or sales promotion? Dispute persists. There are lot many factor gift 1 + 1. Is it gift or my combo sale? Credit should be available. And what is stated to be personal consumption? If employee coming to the business and I'm offering lunch and dinner to them, is it personal consumption or in the course of furtherance of business, to and fro by bus? It is all in the course of furtherance of business. I'm not extending my discussion. I got other panelists as well, but from GST ITC perspective, there are two rules, Rule 36 sub Rule 4, restricting now ITC to the extent of 5% from 1st January 21, though I'm of the opinion, and number of writ is being filed in different high court pertaining to Rule 36 sub Rule 4, Rule 86A, and in the case of Rule 86A, just two more points, then I will conclude. This Rule 86B has got reference under Rule 59 sub Rule 5. So if you're not following this 86B and you have not filed your 3B, then your GSTR1 going to be blocked. And violation of Rule 86B is now one of the reasons for cancellation of registration as well. So I'm only giving food for thought that GST input tax credit, as we thought of, we want it to be simple, good and simple. but it is not good and simple. It is quite, lot many things you have to check. And then when you conclude the number, you need to cross-verify on GST Common Portal. And sometimes you come across the figure which you arrive at is not matching with the GST Common Portal. And different figures is getting auto-populated. Lots of challenge, but nevertheless, we all are going way forward. Our suggestion to the government would be, as a conclusion, these rules which are really curtailing right. And since we are planning now that we will have credit only auto-populated from GSTR 2B, then why such restriction? Why can't we postpone and withdraw such kind of rule which is creating some kind of uneasiness? Though government has clarified that only 45,000 around taxpayer are going to fall under this rule 86B, but even though why such rule which is creating negativity in the market? We need to really work out something good, which is giving good and simple message to all the taxpayers, not only pan-India, even to international community, that GST is one of the best as introduced in India. That's what we all are looking for and dreaming for 2021. With this hope, I'm concluding my discussion. Hope for the best that we will have GST as good and simple tax. Back to you, Sailendraji.
Thank you. Thanks a lot, Vimalji. You rightly said that, but in taxation domain worldwide, in fact, not India alone, if you look at that, taxes are sometimes collected through the back door, and restricting ITC is nothing but collecting taxes through the back door, So, I mean, government often, they think that let's not increase the tax rate and restrict the ITC or the credit, and in a way, effectively, it is nothing but more collection for the government. And perhaps, this 1% cash payment, through the cash ledger, restricting it to 99% is again, I think this is the impact of Corona. The revenue position is very bad, and central government and the states, all of us are aware that they're in a very bad shape financially. It's very rickety condition. And I think the governments are desperate for revenue. And they thought that, since advocism is the guiding line, they thought that perhaps this is the way we can perhaps, buoy up our revenue collections by some percentage. So, Bimalji, I think, you are right, that soul is being tortured, but the government needs money, either to finance even the vaccine, so they are thinking that the vaccine for GST may come later, because that vaccine, the development of the vaccine lies in the hands of some of our political leaders. But the present vaccine, which has been developed abroad and we have to import, probably that needs finances. And for that, GST could be a good source, good instrument. And that's an instrument where, all the states and central, all of them are together. So I'm not looking forward to a lot of positive changes in 2021, because 2021 is certainly going to be another year wasted. So let me go to Punitji now. Punitji, you are going to give us some insight, some window, some thoughts about some of those provisions which have been enacted through the Finance Act 2020 related to GST. So give us briefly, maybe in a phase manner. We can always take up queries from our attendees later, but give us briefly, a lot of interesting dimensions of those provisions.
Yeah, sure. Thank you, Shailendraji. Shailendraji, am I audible clearly?
Yeah, audible, dear.
Oh, great. And Bimalji, is my slides visible?
It's visible, dear. Yes,
okay,
visible.
Great. Yeah. So good afternoon, everyone. So I'll be discussing the changes in Finance Act 2020 and the changes in GST law which are applicable from 1st January. So unlike Bimalji's session, I do not have that much negative news. There are some positive changes only, which we can discuss. So firstly, to start with, when I had a look at the Finance Act, I found that there was one change which was proposed, which has not been done till today. So in the Finance Act, the government proposed to retrospectively grant full or partial exemption for GST on fish meal, pulley, wheels, other parts, etc., because there was some anomaly in the rate of taxation of these products. And when it was discussed in GST Council, it was decided that let's retrospectively correct it. Surprisingly, till now, this provision has not been given effect to. Had it been implemented, it would have resolved the issue for those companies. So, so this is a change which has not been done, but which was proposed to be done in Finance Act 2020. Moving ahead to the changes. So before I start with the changes, one important aspect which I want to highlight is that presently we are discussing about changes in CGST Act, which has been done through Finance Act. Very important to note that as far as local GST is concerned, it is equally levied by state GST acts as well. So to give full effect to these provisions, respective SGST acts also need to be amended, and the relevant provisions have to be notified. So when I checked today, I could find only couple of states, which are Maharashtra and Haryana, which have brought amendment in their SGST legislations and brought them effective, but none of the other states. So it's very important to note that to give full-fledged implementation to these provisions, SGST acts have to be amended, which also happened when series of changes happened in February 2019. So one thing all of us can be mindful is that even though CGST Act has been amended, but correspondingly SGST Act is not. Coming to the changes, the first change which has happened is uh, uh, on the scope of supply. So we have Schedule 2, which provides that particular activities or transactions, whether they will be treated as supply of goods or service. In that, the change which has happened is that even though the scope of schedule was only to tell whether a particular transaction is goods or service, but it also had a condition which is whether with or without receipt of consideration. So when the scope of the schedule is only to tell whether it's a good or service, then it cannot uh, interject in the scope of whether it is treated as supply or not. Because all of you will be aware that for a transaction to be treated as supply, unless it is between related parties, it has to be with consideration only. Therefore, the government has removed these words, receipt or non-receipt of consideration. So now transfer of business assets, it only says whether these will be treated as goods or services. So this is a retrospective amendment applicable from July 2017. It has to be done so that this should not be treated as supply. It is only treated whether it is to be characterized as goods or service. One important aspect to be noted is that when the Finance Act was enacted on March 27, 2020, this section became law at that point of time itself. So the Finance Act did not say that this section will be notified at a later date. So in my view, technically, they need not have notified this. The most positive change which I could see out of these amendments is ITC on debit notes. So the change relates to time limit to claim ITC on debit notes. So the earlier law provided that ITC on debit notes can be claimed up to date of filing of annual return or GSTR of September of succeeding financial year. But the relevant point of time was period to which debit notes related. So let's take an example that say for July 2017, someone has issued a debit note in July 2020. Then 2017-18, if the last date of claiming credit for 2017-18 was March 19, so today he cannot take the credit. But now that delinking has been removed. So time limit to claim ITC on debit note has been delinked from date of original tax invoice. Now date of debit note will be relevant for claiming ITC. So in other words, in my example, if for July 2017, the debit note is raised in July 2020, because it has been raised in financial year 2020-21, so the last date will be September 2021 only. In my view, this is a very positive change from the perspective that uh, many classification or rate issues have come up in last 3.5 years, whether particular products are chargeable to 5%, 12%, etc. So it may happen that, say, for example, your supplier, he was charging 12% GST since July 2017. And later on, he came to know that the correct rate should be 18%. So the issue which will come up is, if your supplier in January 2021 raises a debit note for the prior period, will you be entitled for credit? So the answer is yes, ITC will be available, because now the date of debit note will be relevant for ITC rather than the period to which it relates. So it also gives an opportunity for the various taxpayers, especially who are working in a B2B environment, that if they have underpaid or short paid tax for the prior period and their customers are entitled for credit, they can issue a debit note now and pass on the credit to their customers. The next change relates to invoicing. So enabling provisions have been made that for specified services, tax invoice will be issued in prescribed time and manner. So this seems to be again a simplification measure, that for particular sectors, etc., the government may relax time and manner of issuance of it. So presently, the law already provides that banking companies, insurance companies, financial institutions, etc., they can issue tax invoice within 45 days. With this change, the government is likely to bring further relaxations in all likelihood for e-commerce companies, etc. So again, this is a simplification provision. Now coming to registration. So in the Finance Act, the first change which has happened relates to revocation. So presently, as far as revocation provisions are concerned, there was no standard time limit which was prescribed. So suppose my registration has been cancelled and I file an application for revocation, and there's a delay in filing of it. So there was no standard time limit which was prescribed within which the department, for which department can condone the delay. So now commissioner, as well as lower officers like additional joint commissioner, they can condone delay of 30 days each in filing of application for revocation. So in other words, if my application is delayed up to 60 days, then condonation can be granted by the authorities. Coming to the cancellation, till now, for voluntary registered persons, there was no specific provision for cancellation. So this has been introduced. Coming to TDS certificate. So this is also an important change. So after this change, now the deductor is not required to issue any TDS certificate to deductee. So that statutory requirement has been done away with. Still, TDS certificate has to be issued in prescribed form and manner. And earlier there used to be a late fee if TDS certificate was not shared with the deductee, even that has been done away with. So important to note that GST law already prescribes that TDS certificate has to be issued in GSTR 7A on online portal. So now with these provisions, the ambiguity or the onus on deductor to issue TDS certificate, that has been done away with. Now, coming to the last point from my end are the changes relating to penalty and punishment. Now, in this whole menace of fake invoices, we have discussed in Bimalji's session that so many changes have happened relating to ITC. In other sessions, we'll be discussing the stringent provisions relating to registration, cancellation, etc. have been brought in. So similar changes have been done in penalty and punishment provisions. So the persons who avail or facilitate ITC on fake invoices, which we can say including the abettors also. So equal penalty has been, will be imposed. So the ambit has also been increased to cover a person who retains benefit of such non-compliances, because all these are circular transactions. So whoever is getting financial benefit out of it, that person will also be penalized. And as far as punishment is concerned, which includes imprisonment, etc. So now this ambit has been broadened to cover a person who causes to commit offense and who retains benefit out of such offenses. So food for thought is that we already had section 122(1), under which 10,000 or equal penalty was imposed, and this penalty is over and above that. Secondly, the issue which will come up is that these provisions have been introduced now from January 2021. So being substantive provisions, in my view, these will only apply for offenses which have been committed after January 21. So unless the government brings a retrospective amendment, these provisions relating to penalty and punishment will be treated as prospective only. So that's all from my side. And these were the major changes which have made in the Finance Act and which are applicable from January 21. Over to you, Shailendraji.
Thank you, Punitji. Thank you for your wonderful, positive, and you really highlighted, particularly for Bimalji, a lot of interesting and positive changes which our GST bureaucracy is really capable of doing. If they want to do some good, they can. But right now, perhaps they are being clipped. They don't have the cushion of the revenue, and their back is paining. So perhaps because of that only, a lot of this pain has been transferred to Bimalji, and of course the taxpayers like us. And things will change, but perhaps not in 2021, but things will certainly change. And most of it, perhaps, there is a tendency which maybe N.K. Gupta Sahab would like to give us, a peep into it later, that, most of our tax policy makers, they really wait for our judiciary to give them, a mild slap, if not the stringent one, and remind them and toss out, some of the rules which have been framed by them, perhaps not with so much of wisdom, and perhaps in order to meet, some of the exigencies, short-term exigencies, to meet some of the requirements of the interregnum period. So I think, a lot of these changes which have been notified through these notifications on 22nd December, perhaps, are basically to meet those kind of contingencies and also to give a message or to at least to create a sentiment that, the GST bureaucracy is watching you. If you are into the business of, the fake invoices, the government is not going to take it lightly and casually. And there are certain provisions, and perhaps there is a message again for honest taxpayers. Of course, all of us are concerned about honest taxpayers largely. The burden is being multiplied for them. in terms of compliance. But the message is again right from the beginning, 1st July 2017, that you better be careful about your suppliers, whom exactly you are, giving your POs, for supplying the goods or services. You better be a little more careful about verifying their credentials, and also motivating them, coaxing them, persuading them that you better file your GSTR1. So, I mean, all these messages which right from day one, of course, as a taxpayer, all of us know that this is an additional work which is being passed on to us. Our job is to pay taxes on our outward supplies, but ensuring and again persuading suppliers, perhaps that message again is being passed on by the GST bureaucracy, by the government itself. Perhaps they don't have the mechanism, and it's better for us that way, that we don't allow our lawmakers and our bureaucracy to put, or come up with new innovative tools, to put pressure on suppliers, or maybe to stifle their throat, or maybe to hold them by collar and holler them, in order to file their, the invoices, etc. It's better for us that we choose our suppliers carefully, we persuade them, we motivate them that you better comply if you want long-term business with us. And for business relation, ultimately, a supplier is also a businessman. And fake invoices, guys, are in any case fly-by-night operators. I mean, they are there for certain gains and they will run away. So, I mean, those things are always there. I'm very hopeful that things will change for positive. Certain things have gone off the track. We will, all of us together, we will bring it back, on the track. So let me go to Mr. Tushar. Perhaps he is going to tell us more and going to scare us more in terms of when exactly our registration is going to be cancelled, and under various circumstances. Of course, there is a tweet, there is some clarification about the myths, etc., facts and myths. I mean, that registration will not be cancelled in case of genuine cases, etc. And this is largely to deal with, the fake invoices, guys, and some of those organized operators who are in the business of fake invoices. So over to Tushar ji.
Thank you so much, Sharendra ji.
Mr. Tushar, I hope you are around. Yeah. Wonderful. Welcome.
Welcome. Thank you, sir. Thank you so much. I'm just sharing my screen. Is my screen visible?
Yes, visible.
Yes,
Notification 94 has introduced multiple changes related to registration, namely in respect of cancellation of registration, in respect of suspension of registration, and in respect of procedure for taking new registration. So let us firstly visit and understand the changes in respect of cancellation of registration and suspension of registration. Before appreciating and understanding the changes which have been introduced, let us see the existing provisions, and then we will see what are the changes introduced and how does it impact the taxpayers and what taxpayers should do. Section 29 of the CGST Act, read with Rule 21 of the CGST rules, currently provides power to the proper officer to initiate cancellation of registration in various cases. Namely, first, if the taxpayer does not conduct any business from the declared place of business. Second, he issues invoices or bill without supply of goods or services, all fake invoice cases, etc. Third, he violates the provision of Section 171, the anti-profiteering provisions. Fourth, he violates the provision of Rule 10A, that is failure to furnish bank account. These are the cases in Rule 21, pursuant to which cancellation can be initiated by the proper officer. Further, we have Rule 21A2. 21A2 deals with suspension of registration, and it provides that in respect of situations covered under Section 29 and Rule 21, which we have just now discussed, officer can suspend the registration. However, before suspension, he will give a reasonable opportunity of being heard to the taxpayers. These are the current provisions. Now, why this notification 94? 3 additional grounds have been introduced for cancellation of registration under Rule 21. First ground is that there is an irregular availment of ITC and there is a violation of Section 16 of the CGST Act read with rules by the taxpayer. In these cases, cancellation provisions can be invoked. Second case, there is a difference between GSTR 1 and 3B. That is, the amount furnished in GSTR 1 is more than 3B. There is a discrepancy. In these cases, the professor now has the power to initiate registration. Third, he fails to pay tax in cash as per the provisions of Rule 86B, which we had discussed during the initial part of our webinar. So these are the three additional grounds which have been inserted under which the cancellation provisions can be invoked by the proper officer. Simultaneously, under Rule 21A2, they have amended and they have specifically deleted that professor officer is not required to give any opportunity to the taxpayers. Now, earlier there was a specific clause which said that a reasonable opportunity should be given to the taxpayer. That has been deleted. Now, a proper officer is not required to afford any opportunity to the taxpayer. Impact is that in all these 7 cases, the proper officer now has the provision to invoke cancellation without giving any proper opportunity of being heard to the taxpayers. Non-giving of any proper opportunity to the taxpayer goes against the principle of natural justice. We understand that government has issued various flyers wherein they are specifically telling that all these amendments are because of fake invoice cases and to curb all these fake invoice cases. But when we look at the amendments, when we look at Rule 21 amendments, when we look at Rule 21A2 amendments, there is no distinction between a genuine taxpayer and a fake taxpayer. The amendment is not that the opportunity will not be given in case of fake invoices. It is clear cut that opportunity will not be given in any of the 7 cases. He has the power to invoke cancellation without giving an opportunity to hear, which is totally against the principle of natural justice. Now, there can be various genuine taxpayers and various genuine problems which can be faced by the taxpayers. We will just understand them with the help of example. For example, one of the reasons for cancellation is difference between GSTR 1 and 3B. There can be various reasons for difference between GSTR 1 and 3B. It's not always related to the fake supplies. For example, I am doing a review of one of my client. From April 2020 till December 2020, he has reported in GSTR 3B 10 lakh rupees as taxable value. However, and he has duly discharged the tax amount also. However, by mistake in GSTR 1, he reported only 3 lakhs, 4 lakh rupees. Now, what he will do in January tax period return, he will rectify his GSTR 1 and he will report that 6 lakh rupees balance in GSTR 1. So in January, if my taxable supply is 2 lakh rupees, what I will do, I will report 6 lakhs for the previous period, 2 lakhs for the current period, 8 lakhs in total in GSTR 1, whereas in GSTR 3B, it will be a lesser amount. So again, this can be a reason for differentiation. There can be a cases where the tax has been paid through DRC 03, but amount has been shown in GSTR 1, which will result into difference between GSTR 1 and 3B. So there can be multiple reasons for difference between GSTR 1 and 3B. Similarly, when we talk about irregular availment of ITC, again, as discussed during the previous session, we have lots of conditions under Section 16 read with rules. For example, payment to vendors within 180 days. It is my interpretation that this 180 days will apply only if there is a proper contract in which I am liable to pay within 180 days. However, where I am liable to pay him after 180 days, contractually I have decided to make the payment after 250 days, after 260 days, so and so forth, this provision should not get triggered because there is no failure to pay. This is my interpretation, but the officer's interpretation can be different. He may only look from the date of invoice. This 180 days condition has to be satisfied. So there can be interpretational issues related to Section 17.5, etc. So we can have lots many interpretational issues. So on all these cases, he have been given an abnormal power to initiate the cancellation of registration, wherein the genuine taxpayers will actually face the difficulties. If we see the existing grounds of registration, the fake invoice cases are already dealt in. If we see the second clause, issue invoices without supply of goods and services. This clause is already there under Rule 21, and all other clauses which have been added will actually lead a big problem for the taxpayers at ground level. Let me share an experience. We are handling practically a show cause notice issued by a departmental official. In this case, what had happened is we had reported our supplies correctly in GSTR1, but because of cash crunch, we could not pay the entire tax amount in GSTR3B. There was a genuine cash crunch in the year of 2020, and the notice which we have received, they are not demanding the tax amount. The notice which they have issued it states that I have deliberately passed on the input tax credit to the recipient by putting the invoices as GSTR1 and not paying 3B. I am engaged in the business of passing on fake ITC, and hence 100% penalty is imposed. So in fact, there can be a genuine case where there is a difference between 1 and 3B. There can be a genuine case of cash problem wherein I am not in a position to deposit. Even the Kerala High Court has given a judgment that Section 80 can be invoked by the taxpayers and they should be allowed to pay in installments, etc. So in all these genuine cases, etc., we will be at the mercy of the official basis these amendments which we have been introduced. In my humble submission, we should have an amendment to the amendments which have been issued. These are blanket amendments. It nowhere says that these are related only in case of fake invoices, etc. No doubt flyers have been introduced, etc. These are the intentions of the policymakers. But the inspector and the officers who are at the field, how will they invoke these provisions? We only time will tell. And to my mind, we will definitely have serious, genuine problem at ground level. Moving on, they have introduced another rule, Rule 21(2)A, under the chapter of suspension of registration. So Rule 21(2)A states that if an officer on comparison of returns furnished under Section 39, Justice GSTR 3B, with GSTR 1 and with GSTR 2A founds any discrepancies, that is, my GSTR 1 and 3B is not matching, and my GSTR 2A and 3B is not matching. Take an example. My turnover in 1 is 10 lakh rupees. My turnover in 3B is 4 lakh rupees. There is a difference. Similarly, in case of 2A 3B mismatch, I have taken credit in 3B to the extent of 10 lakh rupees, but in case of 2A, it is coming only 8 lakh rupees. In all these cases, if there are significant differences and anomalies, he can issue a notice in Form GST RAG 31, giving the reasons of such differences with an opportunity to the taxpayer to tell why his registration should not be cancelled. And the registered taxpayer has to reply within 30 days. So a specific rule for suspension of registration has been introduced for two cases: discrepancy between 1 and 3B, discrepancy between 2A and 3B. In all these cases, he has the power to initiate the cancellation and suspension of registration. And we are practically aware that there can be a practical problem when we talk about 2A, 3B reconciliation, etc. There can be genuine cases. We have clients wherein the supplier has actually paid the tax in 3B, but by mistake, he has deposited, he has shown the figure in B2C instead of B2B in GSTR 1. So it is not coming in my 2A, but he has deposited the tax in 3B. So in case of 2A and 3B, there can be various genuine reasons. Further, Section 16(2)(c), the virus of Section 16(2)(c) itself is pending before various high courts, etc. That if I have availed the credit and I have satisfied all the conditions, why I should suffer on account of supplier not paying the taxes, etc. So in all these cases, they can very well issue a notice under 73, adjudicate, give me an opportunity, etc. Why lead to suspension, etc. No doubt, government is of the view that all these 21 amendment is related to the fake invoice cases, and they will invoke only in cases of fake invoices. Again, even in Rule 21(2)A, it nowhere says that it will be used only in fake invoices. Even for genuine taxpayers, we will have to deal with all such amendments. In my humble submission, there should be a specific amendment in these rules wherein a distinction between genuine taxpayers and fake taxpayers have to be made. This is the format for REG 31, which wherein an intimation for suspension and notice for cancellation will be governed under Rule 21A2. That's a format which have been prescribed. Now, moving on to the further changes related to the procedure for application of new registration. Friends, currently, if I want to opt for a new registration, I have to apply in GST REG 01 format. I have to fill part A, part B, and then within 3 days, I am given the registration or an objection is raised. White Finance Act 2019, they had introduced the concept of Aadhaar card authentication. So in case of individual, the individual was required to undertake that Aadhaar card authentication. And in case of companies, etc., the directors, whole-time directors, or in case of partnership firm, the partners, etc., were required to undertake that Aadhaar card authentication. And where this Aadhaar card authentication was not possible, then the verification was through an alternate and viable mean, which was physical verification. Pursuant to this section, which was introduced in 2019, Rule 84A and Rule 9 was inserted. Rule 84A specifically said that a person who opts for authentication of Aadhaar number, in such cases, the date of application shall be the date of authentication of Aadhaar number or 15 days from the submission of the application. Further, Rule 9 specifically said that in case of failure of Aadhaar card authentication or where the person does not opt for Aadhaar card authentication, the registration shall be granted only after physical verification. Now, wide notification number 94, changes have been introduced in Rule 84A and Rule 9. In Rule 84A, now they are asking for a biometric based Aadhaar card authentication along with submission of photographs. Now, as per the notified provision Rule 84A, which is yet to be notified, this provision is yet to be notified from a date, there is a need for biometric based Aadhaar card authentication and submission of photographs. Further, the application for registration shall be deemed to be completed only after completion of the all above processes of Aadhaar card authentication. That's the first change which they have introduced. Second change related to the registration process. Earlier, as per Rule 91, only in 2 circumstances, I was required to undertake physical verification. The officer was required to take physical verification. First, where person does not opt for Aadhaar card authentication. Second, where a person has opted but he has failed Aadhaar card authentication. In those circumstances, there was a requirement of physical verification. Now, a third situation has been added. It specifically says that where the officer deems, in spite of having a Aadhaar card authentication, if he deems there is a requirement of physical verification, then they can go ahead with physical verification along with verification of all documentations. So this is the second change related to the process of registration, wherein verification can be undertaken even in spite of Aadhaar card authentication. And this is more so to curb the fake invoice cases wherever the tax officer feels so. The third amendment is related to the timelines. The current timeline for registration was 3 days. That the registration has to be granted within 3 days of the submission of application, which has now been increased to 7 days. So the first change is increase of time limit from 3 working days to 7 working days. The second amendment is with regard to the timeline in case of physical verification, where as per Rule 9(1), there is a failure of Aadhaar card authentication or he has not opted for Aadhaar card authentication or officer has required physical verification. In these cases, the deemed approval will be within 30 days. Within 30 days, he has to grant the registration or issue the objection. So this is the third major change with regard to the initiation of new registration. So before I end my presentation, I would like to say that the provisions which have been introduced under cancellation as well as suspension of registration, these are to curb the fake taxpayers. But the way amendment has been introduced by the policymaker and the lawmakers, they don't make any distinction, thereby which will result into genuine problems and general interpretational issues at ground level, and taxpayers may get harassment while dealing with field officers, because all those officers works on the data set, which is generated by the internal systems, etc., wherein they only capture the discrepancies. So all genuine taxpayers are bound to actually face difficulties because of all these amendments. More so, it also is very important for all the taxpayers to take compliances very importantly. Now, compliances are no more just a compliance. The way amendment provisions have been introduced, cancellation, suspension provisions are being introduced, changed in respect of reconciliations, etc. It is very important for all the taxpayers to see that my GST 1, 3B books are being matched. I am undertaking my 2A, 3B exercise on a daily basis, on a regular basis, and following up with my vendors. So I have to make sure that I'm adhering to the compliances so as to avoid any dispute at ground level, any harassment at ground level. With this, I end my presentation. Thank you so much. Sir, you are mute.
Unmute yourself, Salindaji. Unmute yourself.
Yeah, thank you, Mr. Tushar, for wonderful message which you transmitted, that compliance needs to be taken very seriously and with a lot of caution. But a lot of these spotlight grabbing changes which you suggested and you highlighted with respect to cancellation of registration and various circumstances and a particular section of taxpayers who are going to be dealt with iron hand, particularly those who are into the business of fake invoices. If you look at the entire sweep of events, you will find that although the focus is to deal with the fake invoice generators, and a lot of fear, a lot of outbursts which are coming up, from experts like you and Bimalji, and of course I'm looking forward to hearing the same thing from NK Gupta Saab, that. But all these changes, if you look at, the concern of the revenue. In fact, that reminds me of very interesting observation which the UK Prime Minister, the British Prime Minister Winston Churchill made during the Second World War, and what he said, that in wartime, the truth is so precious that she should always be attended by a bodyguard of lies. So here, this situation which the fake invoice generators have created, it's like a wartime situation, and the truth is nothing but the revenue, and a bodyguard of lies is all these measures which you have talked about, the cancellation and about the registration, the biometric and various other measures being taken. These are a bodyguard of lies. Again, probably this will go away, later on. I am very hopeful that, in times, maybe in coming months, things will be changed again. And a lot of changes which we see today, these are only to, deal with some, interim period deviations, or if you find that some of those offenses being committed by some of the people, they will, in any case, they will disappear. Ultimately, the people who are serious about their business, they will remain in the business, and they will continue paying their taxes. They will contribute to the exchequer. And as long as we have, Bimalji and other experts who will keep guiding, and putting pressure, on the revenue and the policy makers, things will certainly change in the coming months. So let me now go to Mr. NK Gupta sir. Yeah. So maybe, our last panelist would throw some more light on these issues.
Good afternoon, Shailendra. Thank you very much. And Bimalji, our chairman, and Mr. Shailendra, and Mr. Puneet Bansalji, Tusharji, and all my participants for today's workshop. First of all, I will thank Bimalji for having this session. It was really important because to have a new year, let us have some clarity. And I think we will have the participant will have some clarity on this. The main issue, which is everybody has discussed, is coming to this, that we have got more than 1.5 crore as the taxpayers. And what we noticed that government has recently identified around 9,700 taxpayers who are issuing this, say, fake invoices and all this. And if I take out of the 9,700, if I divide by 5, what I notice that is one fake invoice is reaching to the 5 people. And then if I divide it, then it comes to around 2,000 taxpayers who are issuing fake invoices. that multiply by 5, it is between 10,000. Otherwise, originally there are 2,000 taxpayers who are issuing the fake invoices. Now, my humble request is that just because of the 2,000 taxpayers who are issuing the fake invoices, why the whole community of taxpayers have been punished for this? What I am noticing that it is happening because of the taxpayers who was the whole exercise is because of the fraudulent tax invoices. And I think we have to study this very deeply. The government should also think over it, that why the whole community is penalized because of this reason. Now, the second issue comes that you are penalizing the taxpayers, absolutely fine. What happens to the tax officers who are every day we notice that they are doing some kind of defaults, or some kind of manipulation, or some kind of mischievous exercise. I just give you the one recent exercise which I faced yesterday, the day before yesterday only. One truck was moving from UP to Uttarakhand. This truck wala was having very valid e-invoice. The consignment value was 60 lakhs of rupees. Then it was having a e-way bill also, very valid e-way bill. The only difference in the e-invoice and the e-way bill was that TCS amount of 4,000 rupees. Just because of 4,000 difference, the truck was held up. A simple notice was issued, and that notice was given simply that there is a discrepancy in the document. That's all. When we go there, what is the discrepancy? He said the TCS amount is not there in e-way bill. Now ask him how the TCS amount will come in the e-way bill. It is an income tax matter. But invoice, yes, I can mention that. Now in this situation, when we persuaded after 3 days, he released the truck. Without any reason that he released the truck. Now what is the penalty for the tax officer in such situation? I got a notice, first notice where he is held up the truck, and the third notice when he released the truck, and without saying anything, without mentioning anything, he released the truck also. Now, where is the penalty for this type of officer? In fact, we are not worried about tax compliance. We are worried about this discrepancy power, this powers of the tax officers who are creating nonsense, who for very valid reason, they are just cancelling the registration and they are issuing the notice in every. Now, third thing, I think what important matter is this. Now we have to accept this fact. We have accepted it under the Income Tax Act. So now I think we have to accept in GST also. TDS, income tax TDS, long time back it came. There was a lot of hue and cry that if the TDS is not deposited by the tax depositor, then trade will not be allowed. I think we have to accept this fact that if the GST is not deposited by the supplier, then we are not going to get the credit. I think this is the final verdict which is going to come, whether today or tomorrow, even by the court, or even by the Supreme Court, this verdict will come. So we let us accept this fact that the TDS, it is like a GST. If the supplier has not deposited TDS, the GST, I think we are not going to get the credit. And this is the whole crux of the game. So you are rightly, Shananji, you have rightly mentioned that we have to find out the real, actual vendors who really tax compliant and they follow the tax laws, and we have to deal with those people only. I think this is the lastly. I think there is no other way under the GST, because whenever we have discussed, when I was in the official and Vibalji has also discussed, the officers say, the department says that if the tax has not come to me, if the supplier has not deposited tax to me, how can I pass on to you? And then vendors, you are selecting, I am not selecting. The government is not selecting vendor. Vendor, you are selecting. That if your person is your partner, business partner, where a lot of MNCs called as a business partner, if your partner is not depositing, how can you get the credit from me? I think we have to, one day we have to accept this fact that the supplier has not deposited tax, we are not going to get the credit of this. Now coming to I will come to my chapter here because I got a lot of time. Vimalji has given 20 minutes. I have got only 5 minutes to present my cases. I agree with Vimalji that 1, 2, 3, the GST 1, 2, 3 with the system which was introduced. I think that was a perfect system. In fact, the whole law, GST law has been designed based on that. And since we are not following the system 1, 2, 3, and that's why this whole GST Act, which was a good and simple tax, has become a very complicated tax, goods and service tax act. We, as a chamber, I think I will request Vimalji again that instead of making so many changes and all this, Let us pursue to the government. Let us go to the real GSTR 1, 2, 3. The time has come. We have experienced in the last 3 years, and let us go to the GSTR 1, 2, and 3. One more thing I would like to mention, which is very, as I mentioned to you regarding bureaucracy, Shailendraji, you will be surprised to note that I was arguing one matter between advanced authorities. And in the end of the advanced authority, in fact, there was not a recorded one, but it is both the authorities have said, yes, your case is genuine and is approved. Honest with you, this has been said by the advanced ruling authorities. But unfortunately, after 10 days, they just wanted to save their skin, nothing else, because they were deputy commissioners. Both the authorities were deputy commissioners. They just wanted to save their skin. They given the adverse rulings. Now, this is very shocking that authorities like this, after giving the assurance, had they told me, okay, no, we are not approving this, I was having all the right to withdraw my application. I can withdraw my application even before passing the order. But see, then now I have to go to the appellate authority. But see the repercussion, the whole industry, and this is the IBF industry, sir. The whole industry is getting suffered because now the tax rate, what the advanced authority has said, it should not be 12%, it should be 28% and 18%. The whole industry is suffering because of just advanced ruling. So what I'm saying that unless we have to take some hard decision on this bureaucracy point, and we should be held them accountable, and how we should make it accountable. I think all of us should work on this, and I think that is the ultimate that in the tax ruling. Now coming to my presentation, I'll just share my screen. Shika, do you have the file? Can you please load it?
Sir, you haven't shared the PPT with me.
I've sent to you.
Sir, I have not.
You allow Gupta ji so that he can open from his side.
Just a minute.
Do you have PPT with you?
Yeah, can you see now?
You share the screen. Gupta ji, share the screen.
Can you see it now?
It's
okay,
not
thank
coming.
you. It's not coming?
No, not coming, Gupta ji. You share the screen.
1 minute. No, I'm sharing, but it's not, I'm sorry. Okay, I will go without that. There's not an issue that I will go without this. There's not much to. Now,
yeah, you can tell us.
First is this that there is a, yeah, I'll just discuss the highlights.
Yeah, now started. Gupta ji started now.
Shika, just see if you can. I've sent a mail to in the morning.
No, it's
started?
coming. Gupta ji started.
Oh, okay.
Gupta ji PPT aa rahi hai aapki.
Okay, thank you. Okay. So now first is the restriction on filing a GSTR 1. My first question, Shalenji or Bimalji, arises. This is like my snatching away my right to survive. We are saying that I cannot file my GSTR 1 or 3, whatever it is. Then are you not snatching my right to survive? Because then in this case, I will not be able to survive. I have to close down my business. And then I think it's a question of my survival. So whether my first question arises whether I can do it or not. The first object, this is to force to file definitely the provision which has come. This is to force to file the GSTR 3B, and that's why these provisions have come. And this is through a notification of 94 by 2020. Sub rule 59.5 has been inserted and shall not be allowed to furnish the GSTR 1 in the following cases. But the monthly filers has not furnished the 3B return for the preceding 2 months. I think I have highlighted that preceding 2 months, I think again required a review. This time the amendment, this should be either preceding 2 tax period, but I don't know why this again we put the preceding 2 months. It means the last 2 months, if I have not filed GSTR 3B, able to file the GSTR. Now, similarly for the quarterly files, has not furnished the return for the preceding tax period. If I have not filed the preceding tax period, the quarter, then I'll not be eligible to file the GSTR 1. And for registered persons who are restricted, as has been mentioned in 86B, that has no, then he will not be able to file the return under 3B. Restriction on filing GSTR 1. Now, my one submission is that why we are making such a changes is, can we make one simple return or not? Can't we do this? The 3B and GSTR 1 is one return, and then we file one return only instead of having 2 returns. Maybe the timing bad, but in any case, my input tax credit based on GSTR 1 is a provisional one. So if we 1 month we take it a provisional one, then what is the wrong in that I file the 3B and GSTR 1 simultaneously and we make a single one return. So the compliance also reduces. The 3B and GSTR 1 become one return, and then we file that return. So this is my suggestion, that let us make one return so the compliance reduces and all this hassle goes away. Second is that the law should be enacted in such a fashion that ITC should be allowed only if deposited for the supplier. See, as I mentioned to you, that TDS and GST, like TDS and income tax, has become that unless somebody deposits TDS, you are not going to get the credit. So ultimately, it is going to be this, that unless the supplier has deposited GST, I am not going to get the credit. So why not we amend the law in such a fashion that unless the GST and the law according to this, so that all hassles goes away. Then section 16 and other section to be amended, then let us amend those sections. Now coming to the next amendments, that is 86B already taken. I have taken in this wrongly, that 86B already taken by Bimalji. Now next amendment is limiting to the validity of e-way bills. Now, as everybody knows that from 100 km per day, it is increased to 200 km per day. Now, suddenly this limit has been increased. Now, my first question is that has this been discussed with the industry? Has this been discussed with the all transport motor Congress of motor vehicle associations? That this sudden change, the law providing under 100 km per earlier, now it's suddenly you are changed to the double, that 200 km per day. It required the discussion with the industry as well as the motor association, whether this is feasible or not. Again, then you will go for changing the, definitely I was of the view that 100 km per day has given a very less over. But if the law has been provided, now you are changing it, at least some discussion was required for this with the industry as well as the transport association, that whether it's 200 km feasible or not. This, I think, once it is implemented from 1st of January, this is going to have some repercussion. I don't know how this, because what I was reading, that All India Motor Transport Corporation is already raising an issue that why this changes has come without discussion with them. So now this time has been doubled, and I don't know how the reaction will come from the industry and the transporter. Let us see that. Again, see, you are restricting GSTR 1, then you are restricting transportation, then again you are restricting the e-way bill. That if my registration has been suspended, then I will not be able to generate the part A of GST EWB 1. It means I will not be able to generate my e-way bill. My question arises, if we read the other provisions, on the one side, it has been provided that during the suspension period, person shall make supplies without issuing the tax invoice and shall issue revised tax invoice on completion of cancellation proceedings. If these provisions are there, that I have to issue my tax invoices and I have to revise my tax invoices when cancellation proceedings are over, then How can you say that on the other side it has been provided that during the suspension period, e-way bill shall not be generated? On one side you say that you issue the tax invoice during the suspension period. On the other side you say that e-way bill will not be generated. It's a both sides. It is having a controversial provisions. I think some resolution required on this issue. But again, can you stop my business in such a fashion? It's again a question of survival. So let us debate on this. And lastly, the waiver of the late fees for the delay in filing the form GSTR 4, that is for composition dealers. It is only for Union Territory of Ladakh from the period from 1st of November 2020 to till 31st December 2020. There is a waiver of the late fee payable for delay in furnishing GSTR 4 for the financial year 1920. I can understand this maybe because a lot of delay has been taken in Ladakh for transition of GSTR number and all this, and those people must be facing some challenges, and because of that it has been done, but it is only for Ladakh for this period. So there is a waiver for late fee payable for furnishing GSTR 4. And lastly, I would like to mention that these type of changes, repeated changes, is making the GST law very complex, and we are giving a lot of powers to the officers unnecessarily. Discretionary powers are given. This is going to harm the industry, is not going to help the industry. Let us review once again, and I once again argue on this, that let us come to the original system of GSTR 1, 2, and 3 to remove all the hassles and make it a good and simple tax. Thank you very much.
Thank you, sir. Thank you for your wonderful insight, and you have raised several valid and legitimate points, right to survival, etc. But sir, you know what I see and how I look at the entire basket of changes being notified through notification 92, 93, 94. These are all procedural, and I feel that it's a panic reaction from the GST bureaucracy, that because they found that probably the fake invoice generators, they have hit the vulnerable underbelly of the GST, the entire architecture, and in a panic they have done all these things. But I have some inside information where I find that fortunately for the taxpayers, the discretion which we are talking about today perhaps is not too wide for the field officials, and everything is going to be based on GST networks, internal data analysis, data analytics, and the intelligence being generated. For instance, Mr. Tushar talked about the mismatch between the 3B and the GSTR 1. All those things perhaps, is not going to be there, because certain tools have already been developed by GSTN, which they will be able to, somehow, figure out, the genuine cases, or perhaps to pick up the wheat from the chaff, in terms of the genuine and the fake ones. And idea is, again, the whole stomach of all these changes is to target, the fly-by-night operators who are in the business of fake invoices, who are bringing bad name to the industry and honest taxpayers. And I personally feel that a lot of fear which we have today, because we have the mindset, a lot of information, a lot of anecdotes from the past regime, central excise and service tax, a lot of things were chaotic and helter and skelter and hugger and mugger. Now the things have drastically changed, because GSTN is going to be the prime mover. A lot of data, a lot of things are going to be provided by GSTN, and perhaps based on those substantive, because they also know for sure that tomorrow you are going to move the High Court. There will be writ petition filed in the High Court the moment you suspend somebody's registration. So they will have to substantiate it, and all the data analytics perhaps will help them, or they are going to actually base their entire decision on those data. So hopefully they will not do this. But yes, some of the issues which you rightly pointed out about advanced ruling authorities, the problem is, again, the fault lies in the training modules, because they have been taught, the young officers, the IRS officers, that if you have to err, it's better to err in favor of revenue rather than in favor of SSC. So that is why, even after being convinced that you have a valid reason, your case is much more substantial and better than others, but they lack the bailiff for the truth. That is where the problem is in our system.
What I want to mention, I just wanted to mention, sir, that what Tushar has also mentioned, that whenever some officer is giving some notice or something, some letter, suppose he's giving, he should have some specific issue. See, as I mentioned to why this truck incidents I mentioned to you, in simple notice, he has not said anything. He simply did that some documents are not in order. That's all. What is the problem? Because he cannot write this. I am sure that he cannot write that because the TCS amount is not mentioned in the eBay bill. That's why I'm holding the truck. He cannot write this at all. At least the system should be such that at least he should specify what is the reason for my holding the truck.
I agree with you, sir. But when
these type of letters, we are getting so many letters like this where. Yeah, please.
Yes, sir. When the disorder is in the mind itself, you're expecting an orderly order. That will be very difficult, sir. Good number of officers, they do it for the sake of, either pointing out or probably transmitting a message to their seniors that, look, sir, we have stopped so many trucks today. Somehow, that mindset has to change. They have to put on the clothes of a facilitator. It's very important that, every revenue officer in today's world, and if we have to meet, yes, sir. Yes, sir, you wanted to say something.
One more thing I would like to mention, that this is that they intentionally hold the truck between 20th to 31st. Reason being, the high courts are closed. Many high courts are not working on this issue. And when we say that we will go to the high court, he says, okay, go to the high court. Where is the high court?
Oh, I see, sir. Then you should tell them that there is a vacation bench also. Yes.
One thing for everyone here, I really thanks to everyone here who are joining today. See, we are not here negative. What we are discussing constructive suggestion for the North Block. And one of the participants has said, do not kill the tree for getting the fruits. See, ultimately, taxpayer will give you the revenue once you provide them ease of business. So one of the participants has written in the chat box, and the kind of, this notices which are being issued by the department, I'm also amazed and surprised. See, their numbers, there are two parallel things are going on. One is the GST law, one is the GST common portal. As if GST common portal has their own law. and which is not synchronized with the GST law, and we find a mismatch. One of the notices are being issued in ASMT 10. They are talking about your 2A credited this much, your 3B credited this much. Now this client coming and saying that, sir, I have taken credit as per the data auto-populated in my table 8A of GSTR 9, which is different from the notice given to me. Similarly, lot many things which we are talking about, synchronization. See, apart from GST input tax credit, you rightly said, Shalendraji, it is a soul of any human body, GST input tax credit. But the problem which is going in a manner that even the law and GST common portal is not synchronized. There is no synergy. There's a time gap to make the changes. They are talking about GSTR 2B, then coming back, this figure is not getting auto-populated. You take your own credit in GSTR 3B. Lot many factors are going on. My only humble submission would be that you rightly picked up a point. We all are looking for good and simple tax. But nevertheless, let's see. Over to you, Shalendraji. You can take 5-10 minutes to take the queries of, participants.
Yes, so I will request. We have a lot to talk, no doubt. All the speakers, are agog and full of energy. The GST may not have that kind of energy. We do have. So we can talk for hours, but I will prefer hearing from our honorable attendees rather. The Lordship. Please come up with some of the questions. And please grill us now. It's your time to grill us. I'm expecting some of the questions, from the attendees. The floor is open. Please come up with some questions. Any doubt or any kind of suggestion you have perhaps for the policymakers, because ultimately, they also look forward for valuable and interesting inputs. Ultimately, policy making itself is innovation. And the certain innovations, may go awry, which we have been talking about in notification 92, 93, 94. Those innovations are certainly not good innovations, but we look forward to, maybe we should be giving them certain ideas, certain suggestions.
Now, Mr. T.R. Rustagi has written that why don't you quote international practices, maybe on which the GST applies in India is not at a par with the coverage other countries follow. That could be the reason for government restricting the input tax credit. This is Mr. T.R. Rustagi. You know that earlier he was in TRU. He has written this in the chat box.
Mr. Rustagi is there. If he is there, he can speak for few minutes.
Yes, that we would be honored, sir. We would be honored if you could share your thought with us, sir. Hearing a giant is always a privilege, and we have Mr. Rustagi with us. So let's invite you. Yes.
Is he there?
Sir, can you hear us, sir?
He's written his question.
He has
written his comment.
Is he around?
Bimalji, you can ask someone to unmute him.
Yes.
I think
Sikha, can you check? Can you unmute? There one CA Susant also he's asking for, and you can unmute Rustagi ji as well.
Sure, so I'll check with the IT team.
If possible, in quickest time manner.
Okay.
Unless he will be branded as GSTN. But GSTN has been doing a wonderful job now. I think they are coming up, with a lot of tools, and they have improved their performance in a big way in a very short possible the time frame. And of course there is room.
Sir, Rustagi sahab is there. Rustagi sahab is there. Rustagi sahab, unmute yourself.
In the
I have unmuted him.
But he's there or not?
Should I call him? Let me call him. Yes.
Okay. In the meanwhile, let me share my one view with all of you. Kindly suggest. See, we are finding many challenges for taking credit. Can we have some system, which is initial thought process in my mind, which I'm sharing with all of you? Can we have GST rate without ITC? Let's say you can, no ITC, a GST rate, or there would be two rate, one with ITC, which is the standard rate, revenue neutral rate, and one without ITC. So someone who is not willing to avail ITC, they can follow a lower rate for GST rate chargeable on their outward supply. Maybe this is one of the suggestions coming to my mind, so we can detail out this topic, discuss in a subsequent webinar and seminar. Maybe I can look forward from Puneet and Tushar and Gupta to say their views. What is their view on this particular topic?
Good afternoon.
Puneet ji?
Sir, good afternoon, sir.
So Bimal in my view, it can be very difficult basis our present structure is there. In my view, the process is that indirect tax should be multi-chain tax. At all stages, ITC should be available except for the last stage. Otherwise, I think effectively you are saying either it should be a first point tax or last point tax. Frankly, I am not in agreement with this. In my view, we should have a system like this only, but whatever problems you highlighted in claiming ITC, that surely needs to be addressed. Presently, the way government is functioning, it seems by taking ITC or by giving ITC, they're doing some big favor to us, whereas actually it's our right. So in my view, our representation should be to simplify these things while addressing government's concerns also. So we need to have a fine balance between them.
Okay, this is the just thought process. I thought of taking views that how to simplify this GST input tax credit. Maybe Tushar, you can also say something on this, whatever your views.
To my mind, the suggestion which you have given.
No, we have not given. We are
which we are contemplating. Yeah. At least for few industries we can work out. For example, in restaurant they have done so, a simple rate without ITC. In real estate now we have a 5% rate without ITC. So we should do more of due diligence, come out with sectors where it can be implemented. But as a general rule, in my view, this ITC chain has to continue with the way it was, with some simplifications, with some amendments, and what you had earlier suggested, that entire GST 1, 2, 3, if implemented, will actually solve most of our problems. But at least for few sectors, we can always contemplate those things, that risky sectors and risky kind of taxpayers, etc.
There is one guy, Rajesh Maheshwari from Ujjain. He's writing in a chat box that e-invoicing can remove all if and buts. So he's also saying e-invoice can remove all but if and buts. Nevertheless, Gupta ji, your views on the point?
Bimalji, that I think there should be only one system, the seamless credit. Have a two systems. There will be a problem, and it will one sector also, if we are having that without credit 5% like this, it is going to have the impact of the inflation also, because like food sector itself, how much input tax credit is going or input tax credit they are losing, it will ultimately have an impact on the inflation. So I think the seamless credit without any restriction, and we should not have number of cases where I think one system should be there, that seamless credit, and all the sectors, so that it becomes simpler there. Otherwise, it becomes complicated unnecessarily.
Got it.
So Bimalji, I have just spoken to Rustagi sir, and he has agreed because he was going out. So I told him, sir, this telegenic effect of the computer screen, is inviting you again. So he has agreed to join us and share his thoughts. So I think he's on the system now. We could hear him.
Rustagi sir.
Hi, good afternoon. How are you?
Very fine, sir. Very fine, sir. Please, sir.
I actually, listened in parts only. I'm sorry I could not hear the entire deliberations, but some deliberations were quite interesting. And the major issue, I know that the government has put some restrictions, and then the government has also amended the rules to cancel the license or suspend the license, etc. So that portion I was hearing with great interest. But I don't know what is expected of me, but what I what I want to say, that the GST has seen so many changes. I mean, every day almost some change is being done. And now I think the changes which are being made are quite aggressive changes, in the sense that they have gone to the extent of even canceling the registration if there are cases of misuse of taking the input credit or allowing the input credit, etc. My submission is that GST has been in vogue for more than 3 years by now, and a lot of experience is there on both the sides. That is on government side as also on the industry side. Government has also made some assessment as to how the GST has worked so far, and they have gone in for these changes, taking into account their own assessment. It is a fact that since the operation of the GST, I think more than 300 persons have been arrested because of the fraud which has taken place so far as the ITC is concerned, arising mainly on account of fake invoices. And I think the amount runs into thousands of crores. So that is why they have gone for these drastic changes. They appear to be very drastic, but they are. They have gone to the extent of even canceling the license. But to some extent, I think harsh action is necessary, because GST basically, like earlier Sandvet also, has to revolve on self-compliance and self-policing mechanism. And if there are misuses, then I think we have to appreciate that it is also equally the government's responsibility to take action so that the misuses and the abuses can be curtailed. So if we take that factor into account, then these changes are needed. Maybe that after some time when the situation improves, then the government can again make some amendment to the rules, and the drastic changes which they exist, they can be diluted or reduced to some extent. But I think for the time being, if you ask me, government should get 6 by 10 marks in making the change. Thank you.
Thank you, sir. Thank you, sir. It was important to have, you cannot say that when Rustagi Sahab is suggesting 6 out of 10, this is a pro-revenue kind of use, because, sir is on our side now, and making a fair assessment and also a, honest observation, what is happening on the ground level. I think that realism must be taken note of. And as rightly sir suggested that, all these changes can be rescinded in a few months' time when things improve, and maybe the policy makers, they gather the confidence that they have been able to neutralize the fly-by-night operators, whether it is fake invoices or even the refund. If you recall, initially a lot of accumulated credit was taken as refund, and good number of people, particularly IGST refund, I remember, good number of people, they gave fake addresses, etc. They made money. I don't deny that the connivance can be completely ruled out. No, but yes, the exchequer suffered huge loss, and I think at this time when the exchequer needs more money to fight this, the invisible, the enemy called coronavirus. Probably, the industry, the taxpayers, and all of us as a citizen, responsible citizen, need to side with the government and also persuade the government to withdraw some of the changes which are going to trouble the honest taxpayers from making their contribution to the kitty. So thank you, sir, for your valuable insight.
Thank you.
And also now do we have more questions, Vimalji?
We are almost over by 2 o'clock, so we can conclude today, sir.
Oh, okay. So we are crossing the time jurisdiction now, going beyond that. So I think it's time to say goodbye to all the panelists, for their valuable insights and wonderful inputs coming from, the one-to-one interaction with the GST officials in the field, and also some of them, who are more busy, seizing trucks and pointing out, the errors in the EV bill. where the errors do not exist, or probably it's too minor an error to be, bracketed as error. So perhaps that should be ignored. But such aberrations will always remain in the system, and particularly when it comes to taxation. But wonderful, presentation by Mr. Tushar, by Punitji, of course, Bimalji, it goes without saying, and Rustagi Sahab, of course, and all the attendees who have shown, the patience which goes beyond the domain of Gandhian patience, for staying with us for the entire, this longest marathon session which we had. And we are very, very, very happy that, good number of them have responded to us saying that it was very useful and it was very, very enlightening session for them. And I'm pretty sure the PhD under the leadership of, all the leaders, including, Bimalji and N.K. Gupta Sahab, will continue to have this kind of, the churning of new ideas and suggestions. And all the panelists like Tusharji and Punitji will continue to come up with, equally valuable presentations in days to come. Thanking you all for participating. Bimalji, maybe over to you.
Thanking you as well, our dynamic moderator of the day, Shalindaji. Thanking Rastagi also that he has taken out his time and watched this webinar today. Thanking all the participants. They have taken out their time, though I know the last date is 31st December for GSTR 9 and 9C for 2018-19. In spite of their busy schedule, they are here and they are watching this webinar for changes effective from January 1, 2021. Thanking all the speakers who has given and thrown light on the changes effective from 22nd December pertaining to CGST rule and changes from Finance Act. Thanking each one and all, and to our secretariat team, Monica and Sekha and Taranjit, for their contribution and making it live today, that whatever changes which is being announced on 22nd December, we are live today to discuss. We have taken a note of it. Some suggestion we will summarize and send to the government authority for their correction. So thanking once again and wishing each one of you a very happy New Year 2021. Corona should go away.
Thank you.
Thank you.
Thank you, sir.
Thank you.
Happy New Year to you all also.
Thank you. Thank you.
Thank you, everyone.
Thank you. Thank you.